Hello everyone, welcome to today's session in Quancept. Being an intraday trader, it is very important to time your entry because of the very fast movement that you can face in intraday. That can convert your profit into loss and you can miss many opportunity as well. So in this video, we will be talking about certain indicator that will help you out to time your entry flawlessly in your trading. So let's start the video. But before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install Quancept app application. After successful registration, you will get some free tools in the application that will help you out in your trading. In the application, we have a separate video library as well. So in the video library, we have made certain videos that will help you out in your trading. Okay, so these videos are based on Pro Plus tools as well as on various strategies. So in your meantime, you can go and watch these videos at any point of time. If you guys are having any kinds of doubts or query, so you can contact us. You have to go here in the support. So you will get our contact number as well as email ID. So you can contact us and we will be there to sort your queries out. So let's start today's lesson without wasting any time. So in today we will be talking about intraday trading, and intraday trading when we are talking about it, so we will be using certain time frame. Okay, so we will be using certain time frame here, and these time frame can be of 1 minute. Okay, it can be of 3 minutes, it can be of 5 minutes, okay, and it can be of 15 minutes. Right, so when we if you are a scalper, okay, if you do scalping, so you can choose the time frame of 1 minute and 3 minutes as well. Okay, if you are a day trader who likes to hold the trade for like 1 hour to 2 hours, okay, then you can go with the 5 minute to 15 minute as well, right? But the strategy that I'll be telling you today, okay, so it will cover all of this time frame. Okay, you can apply that strategy in this time frame. Okay, now the indicator that we will be using here, so these indicators will be, the first one we will be using a EMA, that is exponential moving average. So when we are talking about EMA, that is exponential moving average, so it accounts the moving average of last few days, right? And in that it gives more weightage to the you can say recent price, right? So that is your exponential moving average. The other indicator that we will be using, that is your stochastic. That is your stochastic. Now what the stochastic actually does, so it will tell you if the market is overbought. Okay, so if the market is overbought or if the market is oversold, right? If the market is oversold, so we will be using these two indicators to time our entry when we are trading in intraday, right? Okay, now I'll tell you certain settings of these two indicators. So first, in this strategy, when we will be using the EMA, that is your exponential moving average, okay, calculating the average price of last few days. Okay, so in that we will be using 9 exponential moving. So it means we are calculating the average price of last 9 candles, and in that we are giving more weightage to the recent candle, right? So we will be using exponential moving average of 9. Along with that, we will be using stochastic. So when we will apply the stochastics in our chart, so in that you will see there will be 2 lines. Okay, so these 2 lines will be a K percent, okay, and then a D percent, right? So the K percent will be shown in blue color. Okay, so that is a default setting, so it will be shown in the blue color in the chart. And similarly, when you will go with the D percent, so it will be shown with the orange color, or it can be yellow as well, right? Now what this K percent and D percent actually in the you can say in the stochastic is, so when we are talking about stochastic now, so it is a momentum oscillator, you can say it is a momentum oscillator. So it will oscillate between certain levels, for example from 0 to 100, right? It will never go above 100 or below 0, right? So it will always oscillate between these two, right? Now when it is oscillating now, so it will tell me if the market is overbought or if the market is oversold, right? So there will be certain default settings in the stochastic, for example 18 to 20. So 18 to 20. So what is the theory behind these levels? Whenever my stochastics, or you can say the momentum indicator, okay, in stochastics, if it will go above 80, so it means the market is overbought now, and when it will go below 20, it means the market is currently oversold. Okay, and the K percent and the D percent, so when we are talking about the K percent, so it takes account of, you can say, the high and low of last 14 days. Okay, because we take the setting of 14 in stochastics, right? So the K percent is the highest and lowest, you can say, the oscillation of the market or candles, right, of last 14 candles. Okay, so that is your K percent, right? Now when we are talking about D percent, so D percent is the average of it is the average of last 3 candles of K%, right? So when we are talking about K%, so it is taking its value from the last 14 candles from the high and low, okay, from the oscillation. And similarly, the K% is deriving its value from the K%, okay? So it is calculating the average from the last 3 candles of K%, right? So you can say the D% is dependent on K%. So you will notice whenever we will use the stochastics in simple terms, okay, I'll tell you. So you will notice the K% line, the value of this, okay, or the line of K%, it will be you can say faster than the D%. So if suppose this is my K% line, okay, so there will be a line something like this, okay, this will be my D%, right? So whenever my K% will break this D% in the downward direction, it means now the market has the capability that it will go in the downward direction. And whenever the K% line will break the D% in the upward direction, it is going in the upward. So it means now the market will be in the bullish direction. Okay, so I hope it is clear. It can be a little confusing, but we will be clearing it with the practical example as well. Okay, so for that, let's directly go to the Coincept application here. Okay, so in the Coincept application, you have to go in the analyze, then charts, trade and order. And in charts, trade and order, let's apply the index here, because in index we can see there is you can say a good momentum also. Okay, so we will be applying our strategy in that. So I am opening Nifty here. Okay, so let's open Nifty. Okay, along with Nifty, I will apply those 2 indicators. So first, let me remove the remaining indicator. Then we will go here in the indicator, and the first thing we will type, that is EMA, our exponential moving average. So you can see the exponential moving average of 9. Okay, now the another indicator, that is your stochastic. So let's type stochastic here. Okay, so you can see stochastics, and I'll apply it here as well. Okay, now there are certain settings that I have to do in this stochastic as well. So what I will do, I will go here in this setting, and you can see for the upper limit, I will just change it to 70. Okay, for the upper limit. So you also have to change the upper limit to 70. For the lower limit, you have to change it to 30. Okay, so for the lower limit, I will change it to 30. Then I want to hide the background, so I will also disable it. Okay, and then you can see the blue line is denoted with the blue color. The D% line will be denoted with the orange or yellow color, green color. Okay, it can be anything. Okay, then let's see how we will take the trade with the help of this. So the concept behind this strategy is, first, the time frame should be of intraday. So currently I will show this strategy in the 5 minute. You can apply it in 1 minute as well. You can apply it this strategy in 3 minutes as well. Okay, now first of all, there is first condition. Okay, so the first thing that you have to take care of is that first one, the first condition, it would be, first one is that, first of all, I want the crossover of what? Crossover of K% and D%. Okay, the crossover of this in stochastic. So this is my stochastic. So what I want, if I am going for the bullish trade, so I want my K%, okay, it should be breaking D% in the upward direction, right? Somehow like this. So if this is my D, so the K should be breaking it like this. Okay, so it should be intersecting it or breaking it in the upward direction. Okay, somehow like this. Okay, so that will be condition for the bullish one. Similarly, if I'm going for the bearish direction, if I'm going for a bearish trade, so at that time, if this is the D line, so my K should be breaking it something like this. Okay, so these are the 2 conditions that I have to look for, okay, in stochastics. So let's see where I am getting those 2 conditions. So let me zoom in a chart a little bit. So you can see, first of all, I got a condition here. Okay, I got a condition here as well. So you can see my blue line was actually, it was crossing my orange line. Okay, so at the time, whenever this condition will happen, then I have to wait for the market. Okay, then I have to wait for the candle to close above this, to close above my EMA 9. Okay, and whenever I will get that reading, so that will be my entry point. Okay, so let's see where are we getting our entry here. So here you can see my K and D, it gave me a crossover in stochastic. It means my first condition has been fulfilled. Now I have to wait for my candle. Okay, it's supposed to be a green candle and it should be closing above exponential moving average 9. Okay, so these are the two conditions. So you can see EMA gave me a crossover here. Okay, and then I can see the very next candle here, that is the candle of 21 November 10:20. So it gave me a closing above EMA 9. Okay, EMA 9, it gave me a closing. So that is the candle that will be my entry point. So whenever my market will break the high of this candle, that will be my entry point. Okay, so then you can see this was my entry point. Okay, and then my market went in the upward direction. Okay, so I could be trading in 5 minutes, I could be trading in 1 minute. That will give me a very good movement with this strategy, right? Let's see some other example in the current market as well. Okay, so currently my market is trending here. So you can see currently my market is trending here. Now I can see again it gave me a crossover here at this point of time. You can say here it gave me a crossover. My blue line actually moved above this one, this D line. Okay, and then on the very next candle I got a candle which gave me a closing above the EMA 9. Okay, so what would I have done? I just have to mark the high of this candle. So what is the high of that candle? That is 23,737. So when my market will break it, I will take the entry in the above direction. Okay, so this is how you have to take a trade with these two indicators, and your two conditions has to be fulfilled, and then you can take a trade in the time frame of 1 day, 1 minute, 3 minute, 5 minute and 15 minute as well. Now you can see here, this is a sideways market. Okay, so actually we have to avoid any trade whenever the market is in sideways, but let's see how the this strategy gave us indication in the sideways market as well. Though, so the first one is here. So actually it gave me an indication here as well, because my blue line, it crossed below the green line, okay, the yellow line, and after that there was a red candle that gave me a breakout, okay, or that actually closed below. Okay, and after that you can see there was certain candle. So for approximately 20 to 30 minutes my market moved in the bearish direction. Okay, so if I were trading in the option, so I could be getting like 10 to 15 points in this range. Okay, so actually this strategy worked here in the sideways market as well, but the range will be, your profit range will be a little less, right? Similarly, again let's see when again it gave me indication. So you can see on this point of time it actually again gave me indication that my K is closing, you can say it is crossing the D. Okay, so at that time again I will wait for the candle to close below EMA. So you can see this was the candle, and after that again my 4 to 5 candles were in the bearish direction. So it is also working in the sideways market as well, but the range of profit is a little less. So you should be going with a 10 to 15 points if you are trading in Nifty in sideways market with this strategy, right? So we were talking about the trending market. So in the trending market I got a reading here. You can say my the K line, it crosses below, it is crossing below the D line. Okay, and after that on the very next candle it is a red candle that actually closed below EMA 9, and then you can see a good movement, okay, in the downward direction. Now there is a question, till when I have to hold this trade? Okay, if I'm in a trending market, so till when I have to hold this trade? So the answer is that if I am taking an entry on this candle, for example this is the candle of 19 November 2 p.m. So I have to hold this trade until my blue line is actually moves above 80. Okay, so that is when I have to exit from the trade if I'm in a trending market. So you can see my blue line was not crossing, it was not going above 80. Okay, so this is the line of 80, so it moved above 80 approximately at this point of time. So if I was making my entry here, so I have to exit here at this point of time, right? So the market actually closed in between. Okay, but if it was a day trade, okay, of if you were trading in a intraday, so you should be holding this trade till this time when the blue line, or you can say the K line, it will move actually above 80. Right? So this is the period when you have to hold your trade with this strategy, right? It is a very simple strategy that you have to use. It will work for the sideways market as well. It will work for the trending market as well. Okay, the only difference is that it can give you a very good movement when the market is trending. But if you are trading it, this strategy in the sideways market, so the profit range will be a little less, right? And this will work for the every time frame, for if you are a scalper or if you are a day trader, so it will work for you. right? So I hope the concept is clear. I hope you got to know something good today. अगर आपको मजा आया, you can like the video, share it with your friends as well. Make sure to share your comment in the comment section. Thank you so much. If you are new, make sure to like the channel as well, subscribe the channel as well. Thank you so much guys. This is your trainer Ankit Singh Rawat. Have a good day.